The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
So joining us now is to discuss the crypto markets is Adam Z. He's head of digital assets at Global X ETFs. Welcome, Adam.
Thank you, Lawrence. Thank you for Christine. Thank you for having me. Good morning.
How are you?
I'm doing well.
Great. Well, the markets, however, are not, unfortunately. So what are we seeing here? I mean, we're seeing this kind of overall, I don't want to say bloodbath, but okay, it's a bloodbath. We're seeing a sell-off. I mean, that's the best way to describe it, perhaps. Right. A significant downturn, cats and dogs falling out of the sky, you name it. What exactly... is this a risk-off phenomenon, or is there something specific to crypto right now?
Yeah, I think it's a risk-off phenomenon, to your point, Lawrence. If you think about the macro headwinds that we're facing right now, we have this potential energy crisis looming in Europe. You have the rising interest rates, high levels of inflation. So I think not only just cryptocurrencies, but also all risk assets in general are being sold off in anticipation for the pending a worldwide recession.
And I mean, this is, of course, a question that I don't know if this is something you want to dive into, but I mean, are you with the general market flow that it's going to be 75 basis points here coming up this week when the Fed meets, the FOMC meets, 75 basis point hike in the Fed funds rate, or do you think that they might get a little more aggressive? And do you think that the market itself, even though it's pricing about 75, do you think that the overall positioning is that it might even be more aggressive than that?
No, I think 75 is probably the right number in terms of the Fed interest rate hike. I think what would be really telling is Chair Powell's comments in terms of what he views in terms of the marketplace going forward. So I think 75 basis point interest rate hike in September, or the next couple of days, I should say, is probably appropriate.
Adam, how deep are we into this recession, and how will that impact this cycle's crypto winter?
Yeah, that's a great question, Christine. So I think, given the news that we've seen, given the aggressive stance that the Fed has taken in terms of raising interest rates, I think that we are probably in the middle innings of a recession, maybe hopefully towards the later ends. But I think, this cycle, or this crypto winter, to me, kind of feels a little different, right? In the sense that we have a lot of institutional players, well-established and well-known institutional players, I should say, building within the crypto space, right? And additionally, you have relatively strong venture capital funding still flowing into crypto in Web3 companies alone. And then last week, we saw some. Not only did we have the merge, right, but also a large consortium of well-known TradFi companies seeking to launch the first of its kind digital asset marketplace, right, the edX market. You had tokenization of one of KKR's PE funds on the Avalanche blockchain, and also Starbucks offering NFT-based loyalty rewards on the Polygon blockchain. So obviously, the list of these projects go on. So I think there's a lot of compelling development within this crypto winter. And again, I feel this cycle to me feels a little bit different.
And yet we're still... Go ahead, Lawrence.
Well, I mean, to that point, is that do you think that they learned from the last crypto winter, right? So the last crypto winter, everything was pretty awful. And it seemed like, and when I'd say last crypto winter, by the way, that chainsaw you hear in the background, that's Chairman Powell trying to cut the economy down. So the crypto winter that was experienced the last time, it seemed like it was the end of crypto for a lot of people who were participating. It seemed like it was over. But do you think this time the institutions and developers have gotten a little smarter and they're saying, okay, we're just going to ride this storm out? You think it's a different experience? It's almost like game theory. You keep playing the same game over and over again. After a while, you change the rules.
Yeah, I do, Lawrence. And honestly, in a recent survey we conducted here at Global X at the end of August, 80% of respondents stated that they had little to no blockchain knowledge or in blockchain technology or cryptocurrency. And additionally, they stated that 70% felt comfortable in allocating a portion of their portfolios to cryptocurrency. So I think if putting the framework of this market cycle versus last market cycle, I don't think you would see as strong interest in cryptocurrency products as you would that you do today, I should say.
So before you were saying all these great things that are happening with ETH and post-merge, all these, great prospects are coming up ahead. And yet it's taking a bigger hit than Bitcoin right now, down over 8%. So what are the longer term prospects for Ethereum? And is it a security now that we have proof of stake? Is that a concern?
Yeah, I mean, the question regarding ETH as a security, it's difficult to predict or say what the SEC or Chair Gensler's focus on that matter is. But here's what I would say, is that the marketplace is quite comfortable with the treatment of Ethereum not as a security. And the update to proof of stake does not kind of change that classification, in my opinion, at all. But proof of stake, it really means that there needs to be a means to secure the network and to incentivize people to be given that the network is decentralized, right? So that's what I would say on Ethereum being a security. Now, longer term prospects. I'm hesitant to put a price target on Ethereum, but here's what I would say, that the longer term prospects of ETH look attractive despite the near term volatility that has largely been based on a lot of the current macro environment. But ultimately, if you feel that Ethereum, Bitcoin, blockchain technology would be transformative in the next 5 to 10 years, perhaps one might consider a small portion of their overall portfolio, I should say.
So what are you guys doing that, here we are, we've passed the merge point, it's done, it's in the rearview mirror. How does your business change now? And what are you guys doing that's different than it would have been had Ethereum stayed proof of work?
Yeah, I don't think it changes that much, Lawrence. At Global X, we want to be educators and consultants in this space, right? When it comes to digital assets, and from my experience working with advisors and educating them and making sure that they're comfortable with the risks and benefits of any asset class, not just cryptocurrencies, is critical. So what we've been focusing on is allocating a lot more resources on education and research content that the everyday investor can understand, as we believe this is one of the leading contributors to greater adoption. Now, on the product side, we currently have 3 crypto equity ETFs, our blockchain ETF, Bits, and Metaverse. So additionally, we're gearing up to launch some additional cryptocurrency products in the coming weeks that are exploring strategies that, may have the ability to generate staking rewards as well as address certain specific themes and solutions within the space.